So there is a reel I'm going to share. It's a pretty nice reel. Look at the reel first. See the reel, maybe play it twice, and run it in your mind what you think about it, and then come back and watch this video. Okay? It's a pretty interesting thing that I'm going to say. So did you look at the reel? Have you looked at the reel? Tell me, are you impressed? $15 million portfolio. Bought one, did this, did that. Remember, right? So as you guys know, I'm against real estate business in America, and I feel it gives you poverty. And this reel is clearly telling you how it gives you poverty. Yeah, it says it has $15 million net worth and portfolio and all that stuff, but you're missing many of the things. It's not mentioned there. Right there in the video reel, he's mentioning some things that basically he's a very poor person, and I'll tell you. So he's using BRRRR strategy. What is BRRRR strategy is? What is BRRRR strategy? It's basically is, you basically buy, let's say, a house for 200,000. You give 5% down, 10% down, whatever, right? Doesn't matter. Now let's say the price of the house becomes 300,000. So you take out 300 minus 200,000 as a loan from the bank. So you get a refinance, right? BRRRR is, I don't know the name. I don't know the full form, but it is this strategy. Then use this 100,000 to buy 2 more houses. Yeah, to buy 2 more houses. And then let's say, because you put it down payment with it, right? You don't have to pay $200,000 for the house. You pay, let's say, 50,000 down payment, and then you buy a house and then another house. And then they also increase in value, let's say, by 50,000 each or 100,000 each. You keep taking out you keep doing that. You keep taking out the money, keep buying new houses, and once you build more equity in all those houses, you buy more, right? And with the rents, you pay the mortgage. This is a typical strategy. The price to rent ratio is right now, is about 8%, 7%. So they target certain houses. It can be 4, 5, 3, 2, 3% also, but they target certain houses which have more than 8 or 8, 9 or 10%. It's hard to find those houses, but let's say they start because if they find houses which have 12%, then the prices may not rise as much. So yeah. When you implement this BRRRR strategy and your portfolio is $50 million portfolio, guess how much is the equity? How much equity do you have in that? Probably 2 to 3 million. This is written right there, BRRRR strategy, right? This is written right there. That's 2 to 3 million. Portfolio is 15 million. His own money is not 15 million. And the rest is owned by the bank. You should know that. This is written right there. You miss it. That's why I'm here, right? To analyze for you. Second thing is, you know how much money is he making every day, every month? Probably, yes, because he's having 12 million loan, right? He has to pay the mortgage. How does he pay? By the rent. So all the money that he has made so far is put back in this thing. Can he exit this real estate? I made a video about this long time back. Can he exit this real estate portfolio and just put this 3 million in his pocket? Answer is no. To sell this $50 million portfolio, the total commission that he will have to give is 900,000, and he would not be ready to do that. He would rather take money out of it. He's used a strategy, right, to do this. He would rather take money out of this and buy more houses. That's what they keep on doing. This BRRRR strategy people keep on doing. There is no exit. There is no exit. And one day, remember stock market? Stock market, it goes up, one share goes up 1%, agar next day it goes down. Why does it go up and down? That means it's not demand and supply. That means it's not the company's performance. It doesn't change in one day, right? Then what is changing in one day? The money infusion by capitalism, by Wall Street. So Wall Street, this is Wall Street interference, right? So Wall Street is happy, not happy. What would they be happy about? They want to, no, they're not happy. They are simply injecting money into it, or they're taking money out of it. That's how Wall Street basically. That's how the market keeps going up and down, up and down. So that's not demand and supply. That's not the performance of the company. That's just Wall Street what you call it, Wall Street interference. I hope you got my this Wall Street interference point. Housing market also has the same thing. One day Wall Street interferes with it and it goes down. And you know, by going how much down, the equity will be zero. The equity of the person will be zero. If it goes down by 20%, the equity of this person will be zero. All this is written right there. I'm getting it from right there. Yeah. So that's why this real estate strategy will keep giving you very, very poor lifestyle. It will give you poor lifestyle. Yeah. But I also will tell you one strategy that may work. Again, this is not tried and tested by me, so don't hold it against me. I'm an owner of a staffing company. I know staffing formulas, and I've developed a secret formula, a secret shortcut formula to start making $1 million per year within a matter of 1 year or so for a citizen, and maybe 2 years or so for a non-US citizen, person who's in India basically. So it will work. I know I have mastery on that, so I cannot claim the same mastery on the real estate formula, but over the last 25 years, I've developed a general acumen, and many of these creators, they just talk from their general acumen standpoint. They really have not done it themselves. So anyway, so if he quits this position and gets into another kind of property which gives you confirmed cash flow, for example, hotel or apartment complex, and which is basically commercial based, whose value is gauged by the amount of money they make, which is hotel or apartment complex. So that those are commercial. They are not assessed by Wall Street alone. Then he should quit this position, basically buy $15 million worth of this thing. So, and I'm not sure whether the right kind will work or not. So that you have to check. In all likelihood, it should work. My mind says it should work. But even if it doesn't work, he can quit this portfolio and then get depreciation on the target, target property. He can get a depreciation about 40 to 50% in first year, right? And then his profit will not be, his profit will be, let's say 3 million. So he should, so let's say buys a 50 million worth of property, then yeah, I think it should be fine. I will do this math later properly for you, but just to say that this is one thing that will work. If he quits it and gets into a strategy, it gets into a property which is basically some kind of cash flow wise, which is cash flow wise positive, and gives you, which is more cash flow oriented rather than appreciation oriented, like a hotel or like an apartment complex or a commercial building or a commercial or warehouse, that would be better. Yeah, but that is something that he has to learn. It's again, person has been doing for the last so many years. He has been doing houses, right? Now, I mean, developing expertise into this other segment will be very difficult. I know that it may require a lot of work, but anyway, this is something that you can do. I never talk about the solution. This is one of the solutions to that problem that I mentioned so many times in the past. All right, guys. Thank you. Thanks. Bye-bye.